Hello everyone, welcome back to my channel. It is Miss Money Mac. As promised, I'm back this Friday with basic financial information. March Madness is over. That was the topic of how to use your tax refund productively. So every Friday, I will upload a new video pertaining to basic financial information. Today we're going to cover the almighty credit score. And I call it the almighty credit score is because unless you're a millionaire or a billionaire, where you're able to pay for anything you want, cars, houses, boats, whatever your heart desires, you need credit unless you are able to pay for everything outright with cash. So your credit score can make you or break you. So, basic information about a credit score. A credit score is a numerical expression based on an level analysis of a person's credit files to represent the credit worthiness of an individual based on your past relationship with credit. There are three different credit bureaus. Number one is Equifax. Their credit range is 280 to 850. Number two, TransUnion. Their credit range is 300 to 850. And number three is Experian. Their credit range is 300 to 850. Averagely speaking, these three different credit bureaus rate a score of 750 and above as excellent. 700 to 749 is considered good. 650 to 699 is considered fair. 550 to 649 is considered poor. 550 and below is considered bad. With that information being given out, you must remember every creditor defines its own range for excellent, good, fair, poor, and bad credit. Some creditors consider anything above 720 to be excellent credit. You have a third quote-unquote credit score, but it's considered and called a FICO score. FICO stands for Fair Isaacs Corporation. And its credit score range is 250 to 925. That is totally different from the other three credit bureaus. FICO score range, again, is 250 to 925. FICO score is actually the most widely used credit score. 90% of the time when it comes to buying a car, getting a mortgage loan, or your credit cards. FICO scores are based solely on information in consumer credit reports maintained at the credit reporting agencies. So basically, the FICO score comes from Experian, TransUnion, and Equifax. Okay, these are the percentages that make up your credit scores and your FICO scores. 35% is your payment history. So that's the biggest thing that they rate you on. 35% is based on your payment history. 30% is based on what you owe. Your credit cards, your mortgage loan, your car loan. 15% is your length of credit. How long have you had credit with these different businesses? 10% is your new credit that you've opened. And 10% again rounds it out with types of credits you have had. I, over the last few years, have found out different things pertaining to how credit is used. I basically don't agree wholeheartedly with both of them, but I see the point of view, I guess. So some companies who hire for their employees actually run their credit reports. I don't know if I agree with that because, you might be missing out on an actual hard worker. For whatever reason, their credit might be bad. They might have went through bankruptcy or divorce, but I had that happen to me 12 plus years ago. When I was applying for a job for the Federal Bureau of Prisons. And like I said, Years ago, I had filed bankruptcy. At that time, my bankruptcy had been 7 years old. So of course that came up, and some things weren't correct in the information. So I had to get in touch with the state, which was North Carolina, a very long way from Illinois, to get everything squared away and provide them with the information. End up getting offered the job. I didn't accept it, but that's how far back I can remember. Like I said, that was 2002, where the federal government was running credit reports to hire you. So I'm sure over the last 16 years, other companies have started doing that. The other thing that's been brought to my attention that your credit report is pulled for is your car insurance. I really have a problem with that one because my driving record, which used to be the standard that your premiums used to be based on for your car insurance, but now they want to run your credit report. I don't understand what my credit report has to do with how I drive. Whether my credit is bad, whether my credit is good, has nothing to do with my driving record. I look at that as another way for a company to try to get money from you. I'm sure they have their logic of why they do that. But base my car premium for my insurance on how I drive. Like, again, I just think it's a way for a company to get money out of the consumer. So that rounds it up for today. Thank you for joining in. Again, push that like button. Thank you very much. See you next Friday.